I'm here with Victor Friedberg. Welcome to Everything But the Carbon Sink podcast, where we talk about everything food, climate, and finance related. So I couldn't think of a better person to have a conversation with than you, who I would consider kind of an OG in the food VC space. You currently are co-founder and managing partner of new Epoch Capital, which you'll share more with us about. You are also the founder of FoodShot Global. So you've done a little bit in this space, all the way back to your leading S2G, one of the I would consider sort of original food dedicated, really innovative funds focused on this space. So thank you for
It is an absolute pleasure to be here.
Coming along for the ride.
It's been too long for us being virtual friends and finally meeting here in Seattle.
I know, this is great. I do want to start with you have been long in this space. How has and multiple funds that you've led, been a part of, created, how has this space, the food space and the investment space changed and evolved from your time at S2G all the way up to this moment right now? What are you seeing in this space?
Well, let's first start with the before time. So when I co-founded S2G, really at that time, there were a lot of funds investing in food, but nobody was thinking of it holistically. Nobody was looking at it from a systems perspective. You had growth funds that were doing kind of CPG investments of generally bad food. There was ag tech funds doing inputs. Like, nobody was really looking like, what's going on in this system? Yeah. And so I had come out of NASA. I had run one of the sort of first accelerators during the Obama administration there, and everybody there was talking about systems. But nobody had really connected systems and investing together. And that was the thesis and the methodology that I developed. And it looked like food and agriculture was ripe for that kind of systems change. I was not an expert by any means in food at that point, but S2G really got formed on that systems investing thesis. That fund would have never come into existence without Lucas Walton's, vision and his deep dedication, not just of capital, but of intellectual, capital and cultural, capital. And I think that fund, with Sanjeev and Chuck and Matt and the rest, Aaron, have really built a amazing sort of fund. But so the first thing is, that kind of approach didn't exist. Now,
what year is this?
This is 2013 as we were starting putting it into motion, and then 2014 when it got sort of formalized.
We need an official historian too of all these, but that's helpful to sort of a little bit more than a decade plus.
And so let's get to kind of your question, kind of what do we think was going to happen, then what actually sort of happened. And so I think overall, the idea of systems change in food, that thesis was right at the right time, right vintage, right team, right sort of mission. I think and it delivered on impact and return. So I think it was successful and continues to be successful in that way. The things, at least speaking for myself, that I thought about that ended up being different, which is where it gets interesting, is that when you think about food and agriculture, I really thought of that it would be kind of evolving in tandem, that both kind of sectors would be kind of more joined at the hip. The farming side, the ag side, and then the food side. And really, they were and remain very different sectors, and not joined at the hip. They have different cultures, they have different incentives, they have different time horizons, they have different exit, multiples. And so that was kind of a surprise that they didn't move together.
Even though they're literally managing the same exact input along the entire
they're
way.
Clearly part of the system. Stuff comes to our plate, they get to the restaurants, so it's working, but you would have thought that from an innovation and investment standpoint, that they would have been more tied together. So that was one assumption that ended up being different. The other would be that I thought that kind of the acquisition side, like you would invest in companies and they would be acquired by corporates, whether that was big food, big ag, sort of big retail, that there was going to be this sort of golden period. We talked about this a little bit offline. It's like these corporations, especially the big ones, they were in desperate need of innovation and investment and to better align to a changing consumer. And that there would be this golden period where you could invest in companies, get them to a certain point, and then these companies would gobble them up because they had to.
Yeah.
Well, it turns out that wasn't true. They were generally conservative, and that actually served them well in a short-term kind of way. And I remember, like, from the modeling of the fund and sort of the thesis, that you would sort of discount the IPO talk. Right, every company in 2014 that you'd get a deck on page, slide 17 would say, here's our
pathway to IPO.
And you're like, okay, this is more likely an acquisition company, and you discount the IPO side. It turns out that the IPOs were actually the primary drivers of the sort of the exits, not only in the industry, but certainly on the S2G side.
Why was that so, in terms of the larger companies not sort of doing those mergers and acquisitions the way that you anticipated? You mentioned they were trying to be more conservative. Was it sort of like, we'll wait and we'll see, and and then maybe collaborate, or what was the objection there from their side?
I think there was an assumption that the desperation was such that maybe prior to 2014, you'd have to reach 100 million or whatever before a company would get acquired. And we kept thinking that number would go down, where you could get something to 30 or 50 or 70 and it would be sort of acquired. The other thing that sort of happened was that they built these sort of corporate venturing arms. And I think they were trying to learn as they go and give their teams the time, to do that. But I think very mixed results on sort of the corporate venturing side. So I think they wanted the time to be able, to do that. So I think those were the primary reasons. Yeah.
And then in your evolution, talk to me about New Epoch Capital. What's our thesis for that? How are you looking at this space? I'm selfishly very excited about it too, because it has to do with the conscious consumer, but you're actually doing it from the B2B side. And there is this moment for all of us, we're much more aware of where our food comes from, where our clothing comes from, all of these different components, and a much savvier consumer that is demanding more from not just food, but apparel and all these different components. Talk to me about that.
Yeah, I think 2018, 2019, I started to see that, particularly supply chains, were all being changed by the same consumer drivers. And so I identified 6 consumer drivers. That was basically 6 were efficacy. So how is it really better for you? Not does it say it's better, but how is it really better, and how do you back that up in data and science? So that number 1 was efficacy. Number 2 was personalization. So how are these better for you products and services, personalized for your individual
for me
use?
as a customer.
The third was, I call it resiliency, but sustainability is part of that. And we've lived through all of this, certainly from 2020 to now, which is, if you're going to be the next generation of great companies, you have to be resilient to shock. And that shock can be biological, as we saw. That shock can be environmental. That shock can be geopolitical. And that shock can be political. And that was the thesis I was starting to develop in 2019. And all of that came true. Like in 2020 on, that shock to the system.
You called it.
Yeah. And so, if you looked at it from that perspective, all of these different sectors that were being invested in as discrete, siloed, sectors, whether it was beauty or food or apparel, I was like, wait a minute, that's one market.
Yeah.
And it's being driven by the consumer. The problem from a systems perspective is that we don't have the right materials and ingredients, we don't have the right enabling technologies, and we don't have the right marketplaces to make that conscious consumer happy at the purchase point.
Yeah.
So how are we going to invest in the next generation of those companies in order to scale the brands, whether you're a startup sort of emerging, kind of David to the Goliath, or you're a large company who've put out these 20, 30, sort of statements of commitment, and now you've got to deliver on those. So that's the concept.
Is it right to sort of, one of the observations I guess I see in this space also, which makes what you're doing now make a lot of sense. One, we're talking about food and beauty and apparel, and obviously you're thinking about them collectively, but most of us think about them as separate. But even cotton, cashmere, wool, all of these different agricultural products are things that end up being fashion, but they're grown on a farm. And then similarly, cosmetics and the thing we put on our faces, we want those. A lot of times they do obviously have biological origins. Where did that come from, do you think, for consumers, in terms of, I want to not just put, a clean sunscreen on my face, or I don't just want to eat, non-GMO and fully organic, but I want my whole shopping experience or my consumption experience to reflect those values across different sectors?
That's a great question. The way I think about it is, it makes sense that food was first.
Yes.
Right? You're putting it in your body. And so all of the nutritional aspects, the safety aspects, all of those things, clearly food was the first mover in this conscious consumer idea. And then as we started thinking about it was, okay, what you put on your skin is probably the next thing in the sequence.
Yeah.
And then what you put on your bodies, and then the environments that you live and work in. So I think from an investment and innovation standpoint, we saw it kind of sequentially evolving. But to your point, which I think is spot on, is that if you look at the supply chains and you look at those marketplaces and the like, they're all coming from the same drivers, which is, it's either agricultural, or it's biotech generating these things, or they're natural resources. And so once you look at that from that angle, it's like, oh my God, all of these sectors have the same connective tissue. And so let's invest there. There's going to be tremendous growth. Europe is ahead. Regulatory is certainly driving some of that. But in the Nordics, for instance, where I spend a lot of time, that lifestyle is being sort of lived, and I think it's
like
a
signal.
Cultural
value that's more present.
For where America is going to go.
I think that part is fascinating, to what we're saying too, of like, it's very new and innovative for an investor to look at it holistically, and then we sort of do that double click and it's like, oh yeah, all like the system actually hasn't changed, but how we approach it. One of the things that I thought was fascinating that you were sharing too about New Epoch is, you're actually, even though we just talked about the conscious consumer, you're actually doing more B2B investments. Why sort of in that space, if our thesis is focused on the conscious consumer, and what was the opportunity that you saw there to support that system?
Well, I think sort of what I learned from food investments is that the brand side is kind of a high wire act. Like if you get it right, amazing return profiles, and we got that more right than wrong. So I definitely see the brands from an investment standpoint as a key part of the strategy. But from a systems perspective, and I can talk about kind of Sweetgreen and sort of what they did, but that brand does not get to where it needs to be unless the supply chains can grow
and
with them
respond
and
to
respond
the
to the demand side. And that was true of Beyond Meat. They basically had to
share a few, because I think that's really compelling too. Like, you've been associated and supported and invested these really high profile brands like Beyond Meat, Sweet Green, and so many others. Share some stories about sort of those moments and that evolution of the support of them as those CPG companies that maybe is different than how you're approaching your company profile today.
Yeah, so, Beyond Meat, from a investment and a returns profile was extraordinary. But like many young companies, it really struggled. I mean, it was super capital intensive. Ethan Brown, the founder and CEO, he had a clear vision of this plant-based protein future. But the 1.0 products were not great, I would say. I mean, I think they started, people's education. They were in the frozen.
It was fascinating.
Yeah.
I mean, even as a consumer, like, mind blown from that innovation.
Yeah, but they were in the frozen aisle. They were, again, they could have been, sort of better. The supply chains around pea protein weren't, evolved. They were capital intensive. They were margin deprived, and so, like, really interesting story. In 2016, the company was, maybe we were doing 14 million, I think, at that point. Not bad, but we're burning a lot of capital. The innovation's taking longer. The Beyond Burger of this sort of fresh meat product was in the distant horizon.
Oh wow, so it hadn't even.
And so, as I told you, I'm writing this book, and I sort of validated this story about 2 weeks ago, which was there was this board meeting where Beyond Meat was being approached by a very well-known global restaurant chain to do a partnership. And it was going to be a co-branded burger with this restaurant chain.
Huge opportunity.
Huge opportunity. It was like going to be 10 million of added revenue, which was a lot of money for this company, so almost doubling the revenue. It was going to be like high volume, like low margin, but from a branding standpoint, like it would have given us total legitimacy. And the problem was they didn't want the Beyond Meat technology. They really just wanted a veggie burger. But it was like, $10 billion of top line and the brand recognition, the credibility. We're going to be raising another round. Tempting. So there was this board debate, and it's going back and forth, and seemingly for hours, but I think it was maybe 15, 20 minutes. When over the speakerphone, there was a voice, and this voice may or may not been one of the founders of Twitter. And
of what?
Twitter.
Oh, okay. Oh.
And rarely came to a board meeting, but almost like Charlie's Angels, it was kind of this voice over the loudspeaker. And usually very calm voice, but he was like, we are not expletive doing a bean burger. This is classic distraction. This is not what I signed up for. Our purpose is to make meat from plants. And that was this clarifying moment in which we all sort of reconnected to like, oh, wait a minute.
The mission,
that
the
is
purpose
what
of, like,
we're
what
supposed to be doing.
Yeah.
And so from that moment on, that opportunity was said goodbye to, and we doubled down on how do we get this fresh meat, plant-based burger to market. And so we created the resources and the structure to do that. And a year later, that product was developed, ready to go to market. And 2 years after that, that was an IPO. And I believe that if that moment hadn't happened, that clarifying sort of view of what purpose was and how you're going to get to the promised land, I think that was a key moment and something I always remember as I'm looking at, companies to invest in now.
Yeah, that's such a great story. And even to close this conversation with you now too, you mentioned you have a book coming out, and thankfully it sounds like it's related to exactly what I hoped would happen, is getting your insights to this next generation of brands, of food companies, possibly ingredient and fashion. What do we need to know, or what can we learn from maybe the bumps and bruises that you've gone along the way, and how does the book speak to that?
Yeah, well, thanks for asking about the book. I'm literally in the last 3 or 4 weeks of completing it.
Amazing.
So
I expect my signed copy in the mail.
Of
as soon
course,
as it's ready.
yeah.
Very excited.
I'll actually, create a dedication to you in the preface. This is my first public sort of discussion of it. So the name of the book is called The Values Chain. And the general premise is that the most important asset that a company can have is its shared values contract with its customers. But how you operationalize values, that is hard work.
Yeah.
And Sweet Green, which is really where I got the idea of spending so much time with those guys and that investment, they are the archetype for how you operationalize values. The values DNA of that company, which is about local, organic, a positive force on the food system, community. That isn't just words.
Banging, like so delicious.
And so delicious.
Like a great customer experience.
That values and sort of mission statement isn't just words on a slide deck or on a website. You have to build that into your company in everything you do, in the governance of the board, of the way you source ingredients, the way you design your restaurants. All across the value chain is really a values chain. And they did that better than anybody.
Yeah.
And that also requires investors to basically align themselves to that idea. And what these 20s, they were only 25, 27 years old at the time that they started.
I know, they're my age, and I went to school with
at Georgetown?
Yeah.
Oh, yeah.
Yeah, I was at George Washington, so close by.
I mean, to be able to basically tell investors, hey, if you're gonna come on this ride, you have to understand that we're only gonna grow at the speed in which our ability to actually deliver on that shared values contract.
Which is so powerful.
And that meant building entirely new farming ecosystems, supply chains, logistics. All of that had to be built so that restaurant number 1 and restaurant number 280 would never compromise along the way.
Yeah.
That is an incredibly sophisticated idea, and hats off to John and to Nick and to Nathaniel for having pulled that off and taking that now to public market and growing it even,
and really, I would say too, like a footprint for so many other types of QSR chains that came after them too. And I think just as we close this conversation, I mean, one, thank you for all of these insights. And it's, financing is so top of mind for anybody who's working in this space, and to sort of understand how the investor thinks, I think is really critical. And what I'm hearing from that example too is there was this education and socialization and really like a trust building that needed to happen between these investors and the Sweet Green team to say, you can invest, but this is how we're going to do it. Because typically those timelines do not line up with each other in terms of investor expectations, and when you are trying to create systems change, like it works on its own schedule.
And it's hard, and it's time consuming, and it's capital intensive, and you have to be utterly dedicated, and you have to believe that at the end of that rainbow is going to be better for everybody, both on the financial side as well as to their ultimate, goal, which was to be a positive force on the food system.
Yeah.
I mean, that's their legacy.
Yeah, and still more relevant today than ever. So I can't wait to read the book.
Thank you.
Values Chain.
It'll be coming out in 2026, Penguin Random House.
Okay,
Yep.
Awesome. Then I can't wait. Again, thank you so much for
Thank you,
this conversation
Eva. It was
together today.
so much fun.
Yeah, and so
Enjoyed
fun
it.
to chat with you. So we
Great.
appreciate it.